Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to today's deep dive. If you are joining us, you are probably looking for a fast and thorough and really just a highly focused breakdown of the signals buried under today's market noise.
Right, because there is just a lot of noise out there today.
Exactly. You've got a busy schedule and you already know the basics, so you just want the critical insights. And we are pulling our data today from a newly released audio update via Blockchain DXB. It's dated exactly today, actually, Thursday, March 5th, 2026.
Yeah, it's quite the snapshot of the global financial architecture right now. Our goal today is to really look past those superficial headlines you see on social media and understand the mechanics of what the most heavily capitalized institutions are actually doing.
While everyone else is just staring at price tickers.
Exactly. We'll be looking at how capital is flowing and how legacy systems are being rewired and why these structural shifts are directly going to impact the market landscape you navigate every single day.
And we really have a lot of ground to cover. I mean, we are going to look at a massive counterintuitive data anomaly in decentralized finance to start. Then break down a historic integration between traditional banking and crypto.
Which is huge, by the way.
Oh, absolutely.
Yeah.
Then examine an aggressive political strategy, reshaping Washington, D.C., and wrap up with an incredibly futuristic application of artificial intelligence happening right now in Dubai.
It's a packed board.
It is.
Yeah.
Okay, let's unpack this, starting with the market data from the update. Bitcoin has broken past the $70,000 threshold again. It's sitting just under 73,200 right now, with market dominance at 57.30%.
Right.
And obviously seeing green on the charts catches everyone's attention, but we are still significantly trailing that massive October 2025 peak of 126,000.
Which means the context of this current movement is what really matters here. The update actually points to a geopolitical catalyst labeled Operation Epic Fury.
Well, I saw that.
Yeah, and this event is triggering a fascinating reallocation of capital. I mean, we are seeing major investors rotate out of traditional equities and surprisingly even out of historic safe haven assets like precious metals.
Just bypassing the gold standard entirely.
Totally. They are funneling that liquidity directly into the crypto ecosystem instead. It represents a fundamental shift in how institutional capital views risk and shelter in 2026.
But where that capital is actually landing brings us to one of the strangest data points in today's deep dive. Because if we look at total value locked, the TVL across the space, we are brushing up against a massive $100 billion ceiling.
Yeah, 99.30 billion to be exact.
Right. And normally with TVL that high, you would expect decentralized exchanges to be absolutely on fire with trading activity, but they aren't. DX volume is sitting stagnant at just $8.79 billion. So you have $100 billion parked in the system, but nobody's really trading it.
Yeah, and what's fascinating here is the strategy that stagnant volume reveals. Because the heavy hitters, the institutions, the corporate treasuries, they are not interested in day trading the volatility.
They don't care about the hourly charts.
Not at all. They aren't trying to time the market for a quick percentage gain. Instead, they are vacuuming up proof-of-stake tokens to become network validators. They are hunting for long-term staking yields.
So by locking up their capital into the actual infrastructure of these blockchains, they are positioning themselves to earn consistent programmatic returns rather than gambling on price action.
Exactly.
It's like instead of buying and flipping cars on a busy highway, they are just quietly buying the toll booths.
That is the perfect way to look at it. And the digital asset treasury flows confirm this entirely. We are seeing a massive $412.45 million in daily inflows into these treasuries.
Wow.
Yeah, and just a day prior, that metric was sitting in negative territory with net outflows. The floodgates just opened.
Which is exactly why you, the listener, need to pay attention to this specific metric. While retail traders might be hyper-focused on minute-by-minute candlestick charts, the smart money is playing a completely different game.
They are securing yield and embedding themselves into the foundational layer of the financial system.
And we are seeing that foundational layer merge with the legacy world in ways that would have been unthinkable just a few years ago. Which brings us to the monumental shift happening with Kraken.
Yeah, the Kraken financial development.
Right, let's get into that because this feels like a watershed moment. Operating through a Wyoming bank charter, Kraken has officially become the first digital asset bank to receive a Federal Reserve master account.
Which means the plumbing of the U.S. financial system just got a massive upgrade. It took a grueling 5-year regulatory review process, but Kraken now has direct access to Fedwire.
And for context, Fedwire is the real-time gross settlement system that legacy U.S. banks use to transfer funds.
Right, it's the heavy-duty rail network for the American dollar. By plugging directly into Fedwire, Kraken can settle U.S. dollar transactions immediately, completely bypassing the need for third-party intermediary banks.
Let me make sure I'm wrapping my head around the scale of that.
Yeah.
Because the blockchain DXB update goes out of its way to distinguish this from other digital currency initiatives. They clarify that Fedwire is not a central bank digital currency.
No, definitely not.
It's not a CBDC, and it's fundamentally different from something like Dubai's e-dirham.
That's a vital distinction to make. A CBDC is a newly minted digital form of sovereign fiat. The e-dirham is largely a digital payment interface for government services. Fedwire, on the other hand, is the old guard interbank settlement layer that handles trillions of dollars.
Right.
So a crypto-native entity gaining direct, unfiltered access to that specific network means they are no longer relying on a traditional bank to act as their chaperone. They are operating as a true peer to the legacy banking giants.
But the integration goes both ways, though. While Kraken is pushing into the Federal Reserve's territory, the legacy titans are pushing heavily into crypto. The update details Morgan Stanley proposing a physical Bitcoin trust, essentially an ETF structure.
Yeah.
And they're using Coinbase and BNY Mellon as their custodians. BNY Mellon being one of the oldest, most entrenched financial institutions in the country.
It creates an incredible philosophical paradox, honestly.
How so?
Well, if you pull up the original Bitcoin white paper, the entire premise, literally outlined in the second sentence, is the removal of central third parties to prevent double spending. It was designed to be trustless and peer-to-peer.
Right, the whole point was no middlemen.
Exactly. Yet the dominant vehicles for institutional adoption right now are massive trusts that rely entirely on centralized custodians like Coinbase and BNY Mellon to hold the private keys.
And there's a very specific detail in the audio about that custodial arrangement that really caught my attention.
Mhm.
These custodians have baked-in liability limits.
Oh, yeah, that's a huge catch.
The documentation explicitly states they are not liable for certain cyber network risks or broader market risks. So if a catastrophic network failure happens at the centralized custodian, the end investor is still the one absorbing the loss.
It brings mainstream Wall Street level liquidity to Bitcoin, but it completely shreds the not your keys, not your crypto ethos.
It demonstrates that traditional finance is perfectly willing to adopt digital assets, provided they can force those assets into the centralized frameworks they already control and understand. The risk is still compartmentalized away from the institutions.
Yeah.
Here's where it gets really interesting, though, because not every integration between traditional tech and crypto is following that exact Wall Street playbook. Let's look at the SUI dollar, or USD SUI.
Right, the new stablecoin.
Exactly. This is a newly launched stablecoin from a company called Bridge, which is actually owned by the payment giant Stripe. And it's deployed on the SUI blockchain, a network built by the engineers who originally worked on Meta's Libra project.
And the underlying economic model of the SUI dollar is what sets it apart. Because the standard playbook for a fiat-backed stablecoin is that the issuing company holds U.S. Treasuries in reserve issues, the digital token, and then quietly pockets the interest earned on those Treasury bills as pure profit.
Which is a highly lucrative business model.
Unbelievably lucrative. But USD SUI is taking a different route entirely. The yield generated by those underlying U.S. Treasury assets is being routed back into the SUI ecosystem.
To do what exactly?
To either buy back SUI tokens on the open market or to subsidize decentralized finance activities on the network itself.
Now, on the surface, that sounds like a massive win for the blockchain community. You have a stablecoin that actively pays dividends back to the network it operates on. But the audio update rightly questions the mechanics of this.
Yeah, they brought up a great point.
Is routing yield back into the ecosystem actually providing true community value? Or is it just a highly sophisticated form of masked centralization? Because if the primary function of that yield is token buybacks, the entities holding the largest bogs of governance tokens, which are typically the founders, the ex-Meta engineers, and early venture capitalists, are the ones capturing the lion's share of that generated wealth.
It's the classic tokenomics dilemma. It is undeniably a step forward from a private corporation hoarding all the yield. But the distribution of that value still relies on structures that heavily favor the network's largest whales. It's a hybrid model, blending decentralized tech with highly concentrated capital rewards.
And speaking of highly concentrated capital, we need to pivot to how the rules governing all of these hybrid models are actually being written.
Oh, the political side of things.
Because the crypto industry has clearly realized that technological superiority doesn't matter if the regulatory environment is hostile. Today's source material outlines the massive footprint of a crypto-focused political action committee called Fairshake.
The scale of their operation is staggering. Fairshake has accumulated a $193 million war chest.
That is just an insane amount of money for a PAC.
It is, and they are deploying that capital aggressively in the 2026 U.S. congressional primaries. The data shows they have successfully backed pro-crypto candidates in key races across Texas, Arkansas, and North Carolina.
The update specifically points to primary victories for Jessica Steinman and Representative French Hill, attributing those wins in part to Fairshake's backing. It also highlights a heavily funded push in Texas that successfully forced a prominent crypto critic, Al Green, into a runoff election.
Right.
Now, we need to pause here for a second. The audio update we are pulling from today frames this political data through a very specific partisan lens.
Very specific.
Right. It speaks favorably of the Trump administration's environment allowing Kraken success compared to the Biden administration. It highlights Republican primary wins, and it specifically labels Al Green as an extreme left-wing Democrat, while framing Democrats broadly as detractors. Just to be completely clear for you listening, our goal today isn't to endorse that political spin, validate those characterizations, or take any partisan sides whatsoever. We are strictly and impartially reporting the claims and the data presented in the Blockchain DXB update, so you have the full, unedited picture of what is being discussed in the source.
Exactly. If we connect this to the bigger picture, stripping away that partisan framing entirely, the raw data point that matters to the industry is that $193 million, throwing nearly $200 million into congressional primaries, which are traditionally lower turnout, lower cost races compared to general elections, is an incredibly sophisticated strategy.
It's brute force, but highly targeted.
It means the crypto industry is no longer begging for a seat at the table. They are a permanent, exceptionally well-funded lobbying force actively selecting the lawmakers who will draft the financial regulations for the next decade.
It's a massive flex of institutional muscle. But let's take a flight out of Washington, D.C. and head over to the Middle East, because the sheer scale of technological rollout happening there right now is on another level entirely. I want to look at the Dirham stablecoin, the DDSC.
This is a major structural development. The ADI Foundation, which was founded by Sirius International Holding, the digital arm of the massive international holding company, has entered into a strategic partnership with Chainlink to support the UAE's dirham-backed stablecoin.
Chainlink is the connective tissue here, right? They are implementing their cross-chain interoperability protocol, or CCIP.
Precisely. CCIP is the protocol that allows secure messaging and asset transfers between different isolated blockchains. But look at the target demographic here. They are building this infrastructure to support 1 billion users across the Middle East, Africa, and Asia.
1 billion.
Yeah, this is about establishing institutional-grade connectivity at a global scale. They are merging the rigorous compliance requirements of traditional finance, like verifying the net asset value of tokenized securities in real time, with the frictionless speed of on-chain networks.
It's a clear play to solidify the UAE as the central hub for regulated, borderless digital assets. But that level of institutional digital-first infrastructure isn't just happening in the realm of high finance over in Dubai, though. It's actually bleeding into the physical world in ways you wouldn't expect. Which brings us to the final and undoubtedly the most unique story from today's stack. We have to talk about a laser pest control.
It sounds like a total left turn from Fedwire and stablecoins, but it is actually the exact same technological evolution applied to a very physical, everyday problem. A laser pest control is rolling out an AI-powered, solar-powered pest detection network across Dubai.
When I first read this in the notes, I had to double-take. We aren't talking about a guy in a van with a clipboard and a flashlight. How are they actually hunting bugs with AI?
The hardware deployment is fascinating. They are utilizing advanced thermal imaging cameras that can read the specific heat signatures of termite colonies actively living deep inside walls, flooring, and ceilings.
That's wild.
The major advantage here is non-destructive detection. They can map out an infestation without having to tear open the drywall to visually confirm the pests.
And they are backing up those thermal cameras with an array of discrete IoT Internet of Things sensors installed near building drains and deep within air ducts. These sensors are highly calibrated to detect micro-vibrations, heat fluctuations, and the physical movement of insects.
Right.
Since the entire trap network is solar-powered, it operates autonomously 24/7. The update noted that the Dubai municipality already had 237 of these solar smart traps deployed across the city back in January 2025.
But the hardware is really only half the story. The real innovation is the data synthesis. When a sensor picks up an anomaly, a vibration in a drain, or a heat bloom in a wall, that telemetry is sent in real time to an artificial intelligence model. The AI analyzes the data to instantly identify the specific species of the insect and even determine its current life cycle stage. Once confirmed, exact location alerts and data packages are automatically routed directly to municipal response teams or field technicians.
So what does this all mean? Why did we just spend the last few minutes talking about robotic termite hunters in the same breath as $100 billion decentralized finance platforms and Kraken getting a Federal Reserve account?
Because the through line is absolute. Whether we are looking at an AI autonomously identifying termite heat signatures in a high-rise, or Morgan Stanley relying on centralized custodians to route billions in Bitcoin, or Chainlink protocols verifying stablecoin reserves for 1 billion users, we are looking at the exact same transition.
The same core infrastructure.
Yes, we are moving from a world of reactive, human-driven friction into a world of proactive, automated, hyper-connected infrastructure. The technology isn't just a separate sector you invest in anymore. It is becoming the invisible, automated foundation of the physical and financial world.
It really is wild to zoom out and look at the board. Let's do a quick recap of the terrain we just covered. We started with the realization that the smart money has stopped day trading and is instead locking up nearly $100 billion to act as infrastructure validators.
Right.
We saw the firewall between traditional legacy banking and crypto fall as Kraken tapped directly into the Fedwire system. We examined a $193 million lobbying war chest, fundamentally altering the political makeup of Congress. And finally, we saw AI and IoT sensors completely automating municipal pest control in Dubai.
It is a dense amount of information, but it is necessary context for you to have. Being truly well-informed this environment means looking past the daily price of a token. It means recognizing how these underlying technologies, from consensus mechanisms to thermal AI, are quietly and persistently being woven into the fabric of daily life. They are rewriting everything from how laws are passed in Washington to how buildings are maintained in the Middle East.
The operating system of the world is being updated in real time, and it's happening mostly in the background.
This raises an important question, though, something to consider as these parallel tracks of technology continue to merge. If AI systems are increasingly capable of autonomously detecting physical problems, identifying solutions, and dispatching response teams, and if blockchain networks are increasingly capable of autonomously settling financial transactions without human intermediaries, what happens when those two specific systems finally combine?
Oh, man.
Are we rapidly approaching a future where a non-human AI entity has its own digital wallet, autonomously identifies a physical problem in a building, and directly hires and pays a human maintenance worker to fix it all without a single person ever pulling a lever?
An AI acting as an autonomous property manager with its own crypto bank account. That is a heavy but entirely plausible reality to mull over. We will leave you to sit with that one. Thank you so much for joining us for today's deep dive. We hope digging into these sources brought some clarity to the chaos of the news cycle. Keep asking questions, keep looking past the noise, and stay insanely curious. We will catch you on the next one.